Hey everyone, and welcome back to the channel. Let's dive right into what's moving the markets as we head into the holiday season. The US dollar is really having a tough time finding its footing this week. It took a significant hit against major currencies on Monday, and it's still struggling to recover. This weakness is setting a very interesting tone for the market, especially with everyone's eyes now peeled for one key piece of data. So, what's everyone waiting for? It's the third quarter gross domestic product, or GDP, report from the US. This is a huge deal because it gives us the broadest look at how the American economy is performing. Think of it as the country's report card. A strong number could suggest the economy is resilient, maybe even too hot, which might influence the Federal Reserve's thinking on interest rates down the line. On the other hand, a weaker than expected GDP figure could fuel fears of a slowdown and put even more pressure on the dollar. This data release is perfectly timed, or maybe poorly timed, depending on how you look at it. It's coming just as trading volumes are expected to get really thin. As we get closer to the Christmas holiday, a lot of traders and big institutional players will be logging off and heading home to be with their families. When there are fewer people trading, the market can become much more volatile. Any big moves in response to the GDP data could be exaggerated, so it's definitely a time to be cautious. A surprise in the numbers could lead to some pretty sharp swings in a low-volume environment. Looking at the broader picture, this pre-holiday market action is critical. The dollar's recent slide has been a major theme, driven by shifting expectations about when the Federal Reserve might start cutting interest rates. Initially, the market was pricing in cuts as early as March, but some Fed officials have been trying to push back on that idea, saying it's too soon. This tug-of-war between market expectations and Fed commentary is creating a lot of uncertainty. The upcoming GDP data will be a crucial piece of that puzzle. If the economy looks robust, it might give the Fed more reason to hold rates higher for longer, which could give the dollar a much-needed boost. But if the data shows cracks in the economy, it would reinforce the market's bet on earlier rate cuts and likely send the dollar even lower. So, as we gear up for the holidays, keep a close watch on that GDP release. It's poised to be the last major market-moving event of the week and could set the direction for currencies and stocks as we close out the year. It's a classic case of the market trying to squeeze in one last big trade before the festivities begin. That's all for today's update. Be smart, trade safe, and get ready for whatever the data throws at us. Thanks for watching, and don't forget to like and subscribe for more market insights. See you in the next video.